I'm the dumbest successful trader you will ever meet, but like seriously, while most traders are busy overcomplicating, adding indicators, adding more strategies, I've built my trading around one simple setup. And that one setup helped me produce results like this, and this. And the crazy part, it doesn't require you to be smarter than everyone else. It requires you to be simpler than everyone else. Because the traders that struggle the most are the traders that try to learn everything. So in this video, I'm going to show you the exact setup I use, step by step on how to use it. And then I'm going to show you the real example so you know exactly how it works in the real market. So let's get into it. Alright, so the first really important thing that we have to learn on the chart is going to be to find the range highs and the range lows. And basically how we are going to do that is we are going to just analyze where the market stopped making structure, for example, to the downside and started retracing. So for example, if we look at a chart right here, you can see if we try to kind of figure out what the structure is, we made a pull towards the downside right here. You can see we made a nice little low right here. After that, we did a pullback, and then followed by that, we did another low. Then we did another high right here. So basically just these obvious lows and highs in the market are going to be marked out as our highs and our lows. And you can also see right here, we have a low, a high, and then a low, and then a high. So it's going to be really simple. All you do is you just basically look for obvious lows and highs in the market. And if you take a look, for example, in the uptrending market, so right here, what do we have? We basically have a nice big high right here, then a low, then a high, then a low, and then a high. So basically all we do is we look for obvious highs and lows in the market, and they're going to be really important to us, and let me explain you exactly why. All right, so what we have on the screen is a range high and a range low, and basically what that stands for is our highs and lows that we mark in the market. So we are always going to have two lines when we come into the market, and basically that is the whole point of the strategy, for it to be so simple that you only have two lines that you trade based off. So what do we do with a range high and the range low? It is going to be our marker to buy or sell the market. So basically, which is going to be a buy line and which one is going to be the sell line. So the sell line is going to be one above. So the range high is going to be the sell side line. And why is that? Because we are going to talk about manipulations in the market and how the market likes to manipulate opposite side in order to then target to the downside. So right now what we need to understand is when we come to the range high, all we are going to look for up here is of course a short in the market to then of course target the range low. And then for example, how would that actually look on the real chart? So we have a range low right here and then a range high. We are slowly making structure to the upside. We made our range high, and then what happens after that is we actually take out the range high right here, we manipulate the market, and then we trade towards the downside targeting range low. And then basically after that what we do is we have our buy side line right here, and basically when we manipulate it to the downside, what we can do is we can get into longs again to then continue to the upside, because market is always going to seek for these manipulations, which by the way I'm going to explain them so you clearly understand why this strategy is working so good. So in the end that is going to look something like this. So we are going to manipulate the range highs in the market, followed by that we are going to go down and of course take out the range lows in the market, and then market is just going to continue overall direction to the upside. So what we have to take out of this is we need to sell at the upper lines, and then we need to buy at the lower line. So basically at the range high we sell the market, and at the range low we buy the market. So right now let me explain you the whole logic of why this works. So for example, let's say that we have some kind of range high and the range low in the market like this. So right now, what does this mean for us? This means for us that a lot of traders has sold off right here. So at this high right here, there is going to be a lot of stop losses from people shorting the market. Because of course, if the market started going to the downside, a lot of people are going to seek for some kind of reversal all the way down here. And where do they put their stop losses? They put their stop losses at the high. And the same thing for right here. As soon as we reached this low and started reacting to the upside. What happened, a lot of people got into long somewhere right here, and what do? They basically took their stop losses and put them on this low. So what does that mean for us? That means for us that this high right here is going to be filled with stop losses, and then this low right here is going to be filled with stop losses. So what exactly does that mean for us? That means for us, if we manipulate to the upside like this, that means that we are going to sweep all of these stop losses, and these manipulations in the market happen quite a lot, because what the market makers, banks and big institutions want to do, they actually want to extract the money from the market, and this is a perfect way to do it, because they will sweep a lot of the stop losses from these highs, and then what they can actually do is they can draw the market to the downside so they can actually profit and of course take another side of the stop losses. So they are going to take the high and then the low after that, and then they can actually continue with their normal trending side. So what we are going to do is we are going to follow exactly what the market makers, banks and institutions are doing, and we are going to profit alongside with them on these manipulations in the market. So let me right now show you how this looks in the real market. Alright, so here we are in the live market, and in front of us is some kind of structure. Now we are going to pinpoint the highs and the lows, and then we are going to progress into the actual model. So the last thing that we are missing that I didn't explain to you is going to be the entry model. So after this example, it's going to make perfect sense to you. So the first thing that we are going to do is we are going to mark out the structure. So the first thing, we have our high right here, and then we have our most obvious low exactly right here, then a pullback, then this low, a pullback, and then we have this low. So we want to come to the most recent price action so we know exactly what we are looking for. Then after that, we made a huge high to the upside, as you can see. Then after that, we kind of made some lows right here, but they are not obvious, so we are going to extend the price all the way to right now. So basically, what does this mean? This means to us that right now the most obvious high and the low in the market is this one right here, and then this one all the way up there. So what we are going to do is we are going to mark out this range low, and then we are going to mark out this range high. And also this is going to be done on the 50-minute time frame. You can also do it on the 5-minute time frame. So what we are right now going to do, we are just going to wait for the one side to get manipulated, and let's see what side is that going to be first. So looks like we are going for the downside, and right now before we manipulate it, we are going to go down to the lower time frame so we see if we get an entry model. Also, one more thing, if you like the video till now, make sure to subscribe to the channel and also leave a like, and also comment some questions if you have. So right now, if we go ahead and go down to, let's say for example, 3-minute time frame, so entry model is going to be done on the 1 to 5-minute time frame. So it's going to be a multiple time frame, but it's going to be really easy when you understand what we are doing. So for example, let's see if we are going to actually get the manipulation. So we actually did get a manipulation. So right now, what we are looking is something specific. We want to see in this last leg that happened in the market, so this range right here, we want to see a fair value gap. Fair value gap is a imbalance in the market that I have a really smart way to enter the market from. So on the 3-minute time frame, we do not have a fair value gap right here, so there is no fair value gap. So we go to the smaller time frame, and this is a fair value gap. So what a fair value gap is a hole in the market. So you can see from this candle's wick to then this candle's wick, so from the first one to the third one, there is a hole in the market, and basically that is an imbalance or a fair value gap. And now we are going to enter the market only if we actually disrespect this fair value gap towards the upside. And what is the logic behind that? Because these fair value gaps often like to respect the market and push the market, of course, to the direction that they were made. But then if we manage to close above it and disrespect it, that means that market does not want to go down, but it actually wants to reverse. So it's really logical. So if we wait to see if there is going to be an inversion of this fair value gap or a disrespect, so this right here was only the wick of the fair value gap, and you see that we basically did not close with this body above. So we still have to wait for the closure And then this is the closure of the fair value gap. We also had a micro one right here that we also managed to close above. So what we do is we enter the market on the closure. We can put our stop loss below the wick or below the fair value gap. It doesn't really matter. So it's all about risk to reward to win rate. And then we can target any of these lows right here, or we can even target this biggest high right here. That was the range high. Of course, it's going to be a huge risk to reward, and a lot of the times market is not going to have that much power. But let's see how this trade, for example, is going to play out. So this trade actually ended up hitting the take profit. So by the way, this risk to reward is abnormally huge, and I don't personally usually target these risk to rewards because I like to have a bigger win rate and a lower risk to reward, because it just makes so much more sense with, of course, more losers in a row, but the profits are still going to be huge, because it's better to have a high win rate and a consistent model than target huge risk to rewards. But you can see how this model just worked perfectly after we manipulated towards the downside. And also one more thing that I told you about is right now we manipulated to the downside. So we got this winning position towards the upside, but right now we have actually swept this upside line. So you can see if I go to the left, we have swept this upside line. So for example, what we can start looking for is a trade towards the downside. So I'm going to remove this like this. So this was a first winning position. And right now we have a perfect manipulation. And also what do we have? We have a fair value gap right here that got disrespected, and also one next to it that also got disrespected. So if you want to enter the market right now, we can actually enter the market and target to the downside. So what we want to do is we want to place our stop loss logically, so on some of these wicks is going to be perfectly fine. And basically what do? We target towards the new low that we made, which is a new range low towards the downside. So this low is swept right here, so it does not matter for us, but we actually have a new range low right here that we can actually target. So if you put on a trade to target it, it's a 4x to reward. So 4x to reward on a $100,000 funded account and risking 1%, that is $4,000. So let's see how this trade is gonna play out. So looks like this trade will do play out to the full take profit. So you can just see how this strategy is working beautifully. So we manipulated towards the range low, got a entry model that is so logical and that makes so much sense, and that is why this strategy has such a high win rate, so above 80% win rate. We targeted to the upside, got the perfect trade right there, as you can see. And then after we perfectly manipulated the upside, we got a entry model towards the downside, and then when we targeted the downside, trade worked out perfectly. Alright, so I hope you liked the video. If you did, make sure to leave a subscribe and like the video so you see every future video that I upload. Also, one more thing that I want to say to you right now, I decided to do something crazy and to give away my $500 course for completely free. So no any tricks, all you have to do is just claim it for completely free, and you can do that below the video. Also, one more thing, if you maybe want to work with me one-on-one, also you can check that out, and if there is any spots left, apply below the video, and basically if you are a right fit, you may get to work with me. So with all of that being said, I hope that you enjoyed and liked the video, and I'm gonna see you in the next one. Peace.